What is going on, guys? Back here with another video on my Robinhood portfolio, just going over the stocks that I own today. We just had a slight down day, not too much volatility, just barely down, and I'll be going over the stocks that I own in my portfolio, a couple of them that I've revealed so far, as well as two new ones that are actually both within the same industry, and I'll be talking about why I think they will be going either up or down in the short-term future here. As always, if you guys could please like, comment, and subscribe, it really helps out a growing channel like mine. I've had my subscriber count stay stagnant, so it really helps me to motivate to make more of these videos if I see that going up, of course. And as you can see, just down a little bit today, $17. Still up a lot in the last 3 months, up almost $1,000, 12%. Pretty good returns there, definitely take that. So let's see how some of the stocks did today. We have AbbVie 3 shares up barely, Starbucks up about 0.75% there. Definitely a position I want to add more to in the future. JP Morgan, huge bank company, down a little bit. FedEx just missed its earnings report, and it has been down a lot here, down 5% in after hours. Otter Tails down, the utility company. Boeing, which has had a rough couple of weeks here, as you can see, down 10% in the last month. Pepsi, 3M, UNH all up, and Southern, which is also down after being up a lot in the last month. Verizon, been thinking about adding to this position. Let me know if you guys are also thinking about adding. Microsoft, one of my best stocks, just up ever so slightly there. Whoops. And MPW, nice real estate company dealing with healthcare. Iron Mountain, another REIT, down almost a full percent. ExxonMobil, always a very volatile stock. And then one of the newer positions I told you guys about is MasterCard, which has been up almost $10 since I bought it, and I am definitely planning on adding and holding it in the long run. Now, the stocks that we're going to talk about today are both in the same industry, which is the railroad transportation industry, and those stocks are CSX and Union Pacific. And a large reason why these stocks are down is because of a lot of inclement weather that has been happening in the Nebraska area of the United States, which just so happens to be where UNP is actually located, in Omaha, Nebraska, also where Warren Buffett grew up, and the Berkshire Hathaway's headquarters. So UNP and as well as CSX, they ship a lot of agricultural products such as fertilizer and energy. As I mentioned, UNP is headquartered in Omaha, Nebraska, and there's no coincidence that there's been a large level of record flooding there. A lot of roads and bridges have been washed out, causing some serious damage, and this is causing a lot of the corridors to be out of service temporarily. And I think this is all actually short term. Of course, these tracks will eventually be back in service once the water and the weather clears up. Something like a catastrophic event like this doesn't happen every day. It's not like something that you can really plan for. It's just kind of unexpected. And both of these companies are just very good, have been performing very well in the past couple of years. It's definitely a hard barrier to entry. There's a lot of government regulation within railroads. Definitely is very expensive maintaining railroad tracks, and shipping the actual goods and services is definitely not easy to organize, and I do give CSX and UNP a little bit of a leg up there. And just looking at their income statement, UNP has earned $4 billion each of the last 4 years, very consistently beat earnings reports, and has a very solid balance sheet. You can definitely say the same about CSX. It's actually experienced a lot more growth. It's projected for a lot more growth, but just because it is a much smaller company at around $60 billion in market cap compared to UNP's $120 billion. They have both done very well over the last couple of years. As I've mentioned, UNP pays out of 45% of their earnings in dividends. They have a pretty small dividend yield there of 2%, but they have consistently been paying out those dividends this past decade and growing it in double digits. CSX, on the other hand, only pays out 26% of its earnings. It has a lot smaller dividend yield, but it has also been growing its dividend very quickly. Definitely some great stocks to own in the long term. And of course, with all that extra money that they have laying around, that allows them to invest in their business more, which should only increase those returns. So to conclude, I definitely do think this is a lot of just short-term energy, short-term hysteria. I would expect these stocks to rebound. Definitely want to add more to each of these positions, and I feel comfortable with them going forward. But let me know if you guys think that there's more that is under the surface, and if you think they're going to go down. And definitely be sure to like, comment, and subscribe. And let me know what you guys liked. Thanks, guys.